Good morning. Welcome, everyone. Thanks for joining today. We're going to take a look at the charts, at the Forex charts to be precise, and take a look what's going on this Wednesday, the 19th of March. First of all, though, the disclaimer explaining that this material has been made for a global audience. This might not be suitable for everyone. To get the corresponding info on charting conditions and any other details, take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Good. The risk disclaimer also explaining, of course, that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So by continuing watching this webinar, you agree with the content of this disclaimer. Good. So with that said, today we're going to take a look at price action and at support and resistance. So we'll be diving into explaining what is price action and what is support and resistance, first of all, and then how you combine them to look at the market to make a potential trading plan and take trades based on these elements. And do we need some other things maybe to enhance the success rate? All right, this is of course a discretionary way of trading, although you can definitely make it less discretionary by having fixed rules for yourself in your trading plan. For instance, you might want to think of price action, support, or resistance when there's a trend. If there's a trend in play and you're using an uptrend, for instance, and you're using support, and a price action signal at support, well, then you're trying to position yourself within the trend, and you're using that price action as a trigger, and that would be a very smart thing to do, for instance. But you can also use, of course, your price action as a reversal. It's just that you need to have a very proven system, I would say, and good experience to be able to capitalize on reversals in general. So make sure to take a look at Admiral Markets in social media. And with that said, let's head over quickly to this calendar to see if there's anything going on. Yes, we have the pound claimant count change and meeting minutes. So that's a biggie for the pound. No trading on the pound for myself, at least. Then we have, of course, a very, very biggie, the dollar FOMC statement, economic projections, and a press conference. And, of course, it's interest rate announcement, but that should stay the same. Good. So with that said, let's head over to the charts here and take a look, first of all, at your dollar as always. So what happened yesterday? Yesterday, let's see, we had, that was the 18th of March, 24 hours ago. We had a bit of a downside, followed by a spike up, and then down again and up. So it was a bit of a heartbeat day where we had basically a, one of those classical up, down, up days where price at the end of the day really didn't go anywhere, right? It just did this. Let me show you with this tool. Doom, 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 and it's back, right? This heartbeat like this. Or let me just draw it a bit better, like that, right? Up, down, and it really at the end of the day there's no net change at all. Typical heartbeat, because it looks like a heartbeat when you're in the hospital and you see this doom. So what about today? Well, let's take a look. We have this perfect trend line in play. So that could be interesting. It's not a price action signal at support or resistance, but it is an interesting fact. We have this trend line in play as well, so we're in chart pattern. This is a triangle, and you can see that yesterday was actually a very nice bounce off of support. Anyone who was buying it in this area did a great job of buying at support. And did we have any price action signal? Maybe not on the hourly or 30-minute chart. Did we have it on the hourly? Not really. Not strong price action signal. Sometimes you can see by waiting for price action confirmation, you don't really get it that much. You did have a 550-minute wick here. If that would have been enough to convince people to buy it, it is a bit doubtful. Sometimes you just don't get enough price action confirmation. Before you know it, the price already bounced off the bottom to the top. In this case, we would have probably, if anyone would have traded it, it would have had to be a kind of like an anticipation buy. Price action signals, in this case, wouldn't have provided that much help because, well, unless you take this wick as a signal, which wasn't a great signal, to be honest. And before you know it, it already traveled up those 20 or 30 pips, I guess. How much was it? The bottom here is 138.80, and here 139. Oh, 855 pips. So, personally, I did buy it, but a bit higher. Actually, around here, I think it was. But I had my stop loss below this bottom, so it was safe. Still in that buy, and I will trail stop my stop loss probably below this fractal soon enough. I'm waiting for a 1 hour fractal, to be honest, which hasn't happened yet. As soon as I have a 1 hour fractal, I will move it, and I'll probably be at about break even, roughly speaking. Maybe small profit. Anyhow, that's not the point. The point is that this was a buy at support yesterday. This was a sell at resistance. However, because we're in an uptrend, the buy at support has significant advantages because there is a chance that it will break out here and you can gain a couple of extra pips because of that. Whereas the sell in an uptrend is counter trend, first of all, and you have to click out here at the bottom because support will kick in. Or there's a good chance support will kick in. And if not, then we'll see a bear flag, and you can always rejoin the sell when it breaks that bear flag. All right, does everyone see that logic? Doesn't make sense to anticipate in a reversal unless, of course, you really have a wide stop loss and you're aiming for a massive reversal. That's something else. I'm not saying that that's never possible. But if you're trying to trade a triangle, within the triangle, right? Within the triangle, you're trying to trade a reversal in the triangle, then it's better to click and aim for the bottom and not wait for the break because it could not break at all. And you can always re-enter when the triangle breaks. That's my point. It's an important message for TP understandings. Claudiu says that she bought but closed after 4 pips. That's still good that you bought. I mean, the idea was good, so step by step. Every phase, you know, has its progress, right? The most important is just that whatever decisions we make, we analyze them, we evaluate them, and we learn from them for next time. So think about, you know, why maybe you did certain things, what was the emotions you had maybe, or what was the reasons you had, and what of that do you think holds true, and try to match that and compare that and see if next time you can learn from that and what you could do differently, for instance. Then that's where you learn the most from it, in fact. Definitely. Great. You see, just in itself, buying here is already a great job because not many traders can do that, really. You see momentum falling, especially if you look at the 5-minute chart, right? You see this big fall. I mean, ooh, that's scary, right? You know, if you look at this 5-minute world, it is scary. It's not easy to buy. But, you know, if one understands the support and resistance, one understands why there's a good chance it can bounce. So great job. So same holds true here for the euro dollar. I think a break of this top is very likely. I wouldn't want to buy it right here, right now, though, personally. According to my statistics, the break of this blue line is pretty decent. The blue line will break earlier than these bottoms here, this red line. The chances of that are pretty strong. But does that mean you want to buy right here, right now? Maybe. Could be, but you have to put the stop loss at 138.65, which is a pretty decent stop loss. And then trail stop every 1 hour fractal. Of course, the lower it gets, the better a deal one has. I mean, buying off again off of this orange bottom, orange triangle, is a better risk. There's less risk. There's only 25 pips risk. Plus, we're buying it at support. That would make a lot more sense, in fact. So let's see. If we get one more push down, a bounce here would be again great. Maybe the next time will be the turning spot. That would be a buy I would like myself. This could either be an A, B, C correction, and up we go, or this could be an A, B, C, D, E, and up we go. That's why the stop loss has to be below the C wave, because once the C wave gets broken, the whole triangle formation gets invalidated. That's why I'm saying this particular red line, the chances of that red line being broken are small. Can it happen? Yes, of course it can. But according to my stats, it's not that big a chance. So it's worth the risk to take a long. Is it worth it here? Yes, even yes, but it doesn't make, from a conceptual point of view, it doesn't make sense to go long right in front of a resistance. That's the only thing. It would be better to go long from a support level. However, the problem is that if this is an ABC, it's not going to hook back that deep because it's going to continue like this. And we won't get, if it is a bigger triangle, then it will make the hook back and then go up, right? So for those who like triangles, this is definitely one. A, B, once again, C, D, E. And that's why red is currently the only stop loss that is technically correct. Anything above that is a stop loss in the middle of the playing field and is therefore more dangerous and more risky according to triangle rules. And you're putting the stop loss in harm's way. And in fact, if you put it anywhere above 138.65, or let's say at the very max above 138.79, which is the actual bottom, you're actually putting a stop loss in a place where if the market takes you out and still goes your way, you'll be hitting your head saying, oh, I was right, but I lost. Right? Now that's always the worst, that you had your correct analysis, but you still lose the trade. And that's why putting the stop loss at a technically correct spot is always the preferred way to go. Because what is the alternative? Although I don't think it's likely, it is still possible, is that we have here an impulse. At the moment, I don't think it's likely because this is taking too long, really, to be honest, for it to be a correction. If it would have fallen yesterday, I was still thinking, yesterday in my wave analysis, I was thinking this is an A maybe, this could be a B, and we're going down for C. But where that C will end, it could end here, it could end here. Remember, I was saying these are potential targets, but it doesn't have to go that far. And C ended here. There was not a lot of momentum down. At the 61.8. So if anyone bought it here, there's always, of course, that thing lingering in your mind that it could go lower, right, and make this ABC correction, but it didn't. In retrospect, we can see that the C most likely ended here, and this correction is staying like this already. What would be the target? I think 140 is a psychological number. We could put maybe some trend lines on the chart. Not sure, but doesn't look like that great resistance lines. We do have a trend in play though. Something like this going on, like that. So yes, 140 is a psychological number. That seems like a target. It's also the top of this uptrend channel. And if we start putting fibs on this currency, I'm sure we'll see some targets around that spot. Most recently, we had this upside. That target is at 140.40. The most recent fib actually has a minus 272 target. If we look at the very, very most recent fib, we bounced off the 886 fib here. That target is indeed at 140. So any upside would be targeting 140 for the moment. Or you can trail stop it. Trail stop the 1 hour fractal and see how far it can go. If you want a TP, then 140 or 139.96, for instance, would be the way to go, I think. Any questions maybe on the euro dollar? Otherwise, I guess we can take a look maybe in the meantime at our Camarilla indicator, see what that says. Let's see, we have, let's see, H3 long right here. So this could be a bouncing spot, plus it's the pivot point. Wouldn't surprise me to see a bounce here, but let's see if we can make maybe one more fall and bounce off the L4. The H4, however, is way higher. It's at 139.67 up to 139.95. But you can see that that's the last part of the upside expectation that I have. If you put a trend line like that, a breakout trade is earlier. But we do have an H3 short in between it. So what could happen is a breakout, pullback at the H3, then a bounce up to H4, maybe a small bull flag, and then break up. Let's see if that happens. Right? Breakout above orange. We'll have an initial breakout. The currency then will stop at the H3 most likely, pause a bit, maybe make a pullback, pull back to the broken trend line, bounce off the trend line, move up to H4, make a bull flag, then break the bull flag and break the H4 up to L5. That will be a classical trending day scenario here on the euro dollar. We can see how that could play out using the Camarilla indicators. Can you see that visually already? I have the lines here, so of course it makes it easier to see it makes it, this is a visual representation of how I think price could basically move today. Downside, personally, I wouldn't be interested unless we really break below 138.65 or at least 138.80, and the L4 short is already at 139. Personally, I think that's a bit early, but I guess it's possible. Probably we will not even get that low, but if we do, then it's saying that it would be a short. I don't know. I wouldn't be that much focused on shorts, but if I guess it gets there, then I'll go with the flow, but for the moment I wouldn't expect it. This is the pound dollar. Pound dollar is not trending at the moment. It actually made a lot of downside yesterday. It broke. It broke and pulled back and continued, in fact, down to the 50 fib. We'll talk about the 50 fib in just a second. What happened is we bounced off the 50 fib, and we're moving up pretty strongly. So this could be a bounce. A strong bounce of the 50. However, the H4 breakout is way higher, and at the moment that seems justified to me because although we're getting a bounce, I would still be careful. There's no trend on the pound dollar. L4 makes sense. It's below the bottom, down to L5, which is probably the 61.8 fib. That makes sense. For downside, that makes sense. If we get that far, we probably won't, but if we do, upside makes sense too. It's further away. We first need to see more upside continuation. For the moment, we're at a resistance spot. I don't like the pound dollar too much anyhow at the moment because it's not in a trend. Let's take a look at the charts. Alrighty, 1 hour chart. We had this triangle more or less. Sorry about that. It's just my charts do not seem to be updating. Strange. Well, what happened was we fell below this triangle. Here it is. Now it is. Okay, good. Maybe my internet wasn't working for a second. So anyhow, sorry about that. It's just I knew that the charts were not being updated. So I was trying to see why, and it's maybe my internet. Hopefully, hopefully you hear me. Can someone quickly confirm that by a Y or a yes, please? Okay. Thank you all. So basically, this pound dollar hourly broke this triangle here, and we pulled back to the triangle effect and went down. And where did it go down to? Well, it went very close to the 50 fib. We definitely talked about the 50 fib and the potential for the price to bounce. If it was yesterday, I'm not 100% sure, but I mean, we've done that in previous sessions for sure. Now, the price did miss it about 8 pips, so would have been difficult. Probably if anyone had a pending order, unless you put it 10 pips above it, then you missed it, which is a bit of a shame. It's still, because you missed it by 10 pips, maybe it's the target, the fib is still open, although that could be the bounce itself already. So this could have been a correction. This could have been, of course, the upside. This could be a correction like this to the 50 fib, and now we could bounce. Will that happen? We'll have to see how price responds to the 50 fib. How does it bounce up? If it bounces with the, if it stops with the bear flag, then we know that there's a good chance to fall down to the 61.8 fib. It didn't make a bear flag as yet. It's looking like not as a bear flag. The rebound is looking relatively strong and some momentum. So it's too early to tell if it's a lot of momentum or not. But basically, if we break above this orange line now, then we would have an idea that this could be a breakout back into the upside. One of the confluences that one could look for is, for instance, this right in here, where we can see that the bottoms make a lower low, but the oscillator makes a lower high, which means we had divergence. That divergence is already been taken care of with this upside. So we're at a bounce or break spot, basically on the pound dollar. We can go continue down or break up. Personally, I'm not interested in the move down myself, just because pound dollar really doesn't have a trend in my opinion. It's still too, I mean, I look at the 4-hour chart and I see just a lot of mess, so I'm not too interested. And to me, it would have to break above, make a pullback, and then I might be interested. That's it, really. But, I mean, I'm telling you that not because I want to trade it, but just from an analysis point of view, that this is a bit of a bounce or break spot. Let's see what happens. If it breaks to the upside, I'll be interested. If it breaks the 50 fib, well, then it's definitely becoming bearish. Maybe there's some potential to short it down to the 61.8. Whether I will do that really depends what happens. Oh, sorry, folks. Sound is back now. My chair hit the mute button that is externally on the headset. Sorry about that. I'm not sure what you heard the last part. What was the last part you heard? Just roughly speaking. Did you hear that I'm not interested in trading it? Okay. Thanks. Good. So yeah, I'm not interested in trading it personally unless it really breaks, hooks back and bounces. this is a break or bounce spot, basically. So just out of, I'm just telling you just out of informational purposes. If it does break this 50 fib, then there is some space down to 61.8. If I were to trade that, really depends on how price looks like. It would have to look impulsive. I would have to see some nice bear flag and a break of that. It could be reason to short it down to the 61.8. However, in general, though, I do want to let you know that I'm not too big of a fan of trading personally within this uptrend channel, this daily uptrend channel. Catching a last piece at the bottom of an uptrend channel to the downside is not, normally speaking, too appealing to me. In fact, if you're looking for price action at support or resistance, because that is our topic, and sometimes I divert from our topic a bit more than I want to, is that if you're looking for price action at support, then this would actually, at the 61.8 or 50 fibs were actually great things to look for. The 50 fib already happened. The 61.8 could be the next one. If you took a bounce at the 50 fib, you can move it to break even at the moment, I think, and just hang in there and see if it does break up. The 61.8 at the bottom of this daily uptrend channel would be the same story. And that would be a good example of price action at support and resistance, to be honest. Just like the 50 fib, although the 50 fib was a bit further away from the bottom of the channel, but still good enough in my book. However, that's the past. At the moment, because we already had the bounce at support, what is left is a bounce at resistance, which I don't find at all interesting, or a break above resistance. That's the difference. Price action at support or resistance is basically, usually speaking, a bounce. But strictly speaking, it could be a break too. But it's a reverse psychology. So what we've been talking about is a bounce. For instance, if you see a 1 hour candlestick pattern, 1 hour bullish candle, this is a 3-line break, I think, if I remember correctly, although it's certainly not my strength to know all these candlestick patterns by heart, to be honest. This, however, certainly is a bullish candle at a 50 fib. That's a clear signal of support, right? If one were to wait for that and try to trade the 50 fib, one could have waited for this, right? That's a bounce example because price is bouncing at the 50 fib. What would be a break example of price action and support resistance? That's the opposite, right? When we have price approaching a support or resistance, and instead of price bouncing down, it's breaking. Now, what kind of price action signals could we see that would justify a break? Well, how do we judge that? One way, in fact, is instead of looking for a reversal, is looking for a continuation signal. And one of those continuation signals would be bullish price action close above a trend line, for instance. It's maybe not the best example, but the pound dollar probably doesn't have one better one than this. When you see a full close above it, plus you have a full candle above it, then you're breaking through that level. Now, not always is that true. Sometimes when you have a wick, you still get a good break. I'm not saying, look at this example, right? There's a wick above it, still we continue up. Now, this whole pound dollar was a bit of a wacky sideways move, to be honest, but let me take a look at a bit more better trending market maybe. In some cases, though, if you wait for candle close above a trend line, you're a bit late to the show or to the party. However, even if a trader would have traded this particular breakout, still would have done pretty well, as we can see. That would be price action at support and resistance as well, but it's a breakout confirmation. It's not a bounce confirmation. All right. So with price action, I primarily mean candlesticks, but also momentum. What is momentum? Momentum means one directional price movement. Correction means sideways movement. And when you have price action at support or resistance, then you have a bounce or break spot. If you have a resistance line and a support line and price is bouncing in between those, it's actually constantly at the bounce or break spot, but it's just bouncing. If it then decides to finally break out of one of these trend lines, then of course it's breaking. But each of these is a bounce or break spot. If the, one of these two things is going to happen. It's either going to bounce or break. If it bounces, the chart pattern, the chart contracting triangle in this case continues, right? Maybe for some of you that sounds obvious, but I just wanted to go through, make sure that that's clear. That's all for everyone. So that's it. That's the pound dollar. I guess nothing else to add. If you have questions, let me know. Euro pound is retracing at the moment. I'm not a big fan of trading the euro pound. Anyhow, so it's just for educational purposes. In fact, however, we do have some divergence between the 1 hour tops here, so it's looking like we could potentially stall and maybe. Oh my! Let me try that again. Let's see if we can. Probably because of the divergence, there's a high likelihood of at least going back to the bottom of this channel, where our moving average is as well. And for those that know the rule of divergence, when we have divergence, there's a good chance that we'll go back to the long-term moving average. And the long-term moving average, just in case you're wondering, is 144 EMA. I mean, you could use 152. I'm sure it'll be roughly the same result, but that's what the one I use. So there's a good chance we'll make that fall. I'm interested in that trade? No. Because I don't like the euro pound anyhow. Plus, that's the main reason probably. Second reason would be I'm not a big reversal trader, as you know. Odd USD, but that's basically when you're looking for, with the trend continuation, this would be the rule of thumb to look for a potential bounce in this spot. Odd USD. Odd USD did break to the upside and is trending nicely, in fact. Still pretty close to resistance, right? When it broke the orange line, where did it go to? Up to red, the top. And that's the space. That's how you can judge how much space there is. By using support and resistance, you can also understand how much space there is from one point to another and understand if that particular zone, space, is interesting to trade or not, relative to the risk that one has to take or should take in terms of pips, I mean. So when you break this trend line and you put your stop loss here and you know the price can stop here, then that's probably not worth it, even though it made that move. Even though we expected this move. From an hourly perspective, the trade didn't have a sufficient reward to risk perspective, unless one would have used a tighter, lower time frame, such as a 15-minute world, or maybe even a 5-minute world would have been needed. Yes, 5-minute world, we could see reason to go long here, stop loss here, and take profit here. That's the only way a trade would have made sense. I'm not advocating that everyone should do that right away, but it's because it's more risky. But in this case, it did work. All right. Anyhow, that was a breakout. That was a break at resistance. This is now turning into a decent trend. And for those who remember, we had, I think we talked about the, let's see, this is the 10th of March. You see, that's already a while back, but anyhow, if I remember correctly, we talked about the potential for the price to bounce here. Oh yeah, we did. Now I remember. Remember, we said wait for the break of this fractal, and if you want to trade it tight, trail stop the 1 hour fractals. If you would have done that, you would have exited about here, and you would have had this much of profit with this much of risk, which looks like a 1.5 to 1 to me, roughly speaking. So that's a great trade. If you're aiming, however, and let me take everything off, if you're aiming for the 50 fib, then I said use the wider stop loss, remember? And in that case, hang in there for further gains, right? So in that case, if you're aiming for the bigger target, the 50 fib, let me show you what that is. Okay, first on the daily chart, what is the 50 fib I'm talking about? Just in case you're wondering, here, 50 fib, at 92, or the 61.8 at 93.40. If you took that trade, what you can do is now trail stop the 4-hour fractals like this, okay, up to 92. At the moment, if you would have taken the trade in here, with the risk here, that's your risk at the moment. Well, not at the moment, that was your risk. And this is the profit you have locked in, which looks like about a 1.2 to 1 at the moment. But you're still aiming for 92. You're still in the trade. And it could become about I guess a 3 to 1 trade in total if price gets to the 92. Now at the moment, I don't see any trade because we're right at resistance, which to me doesn't make sense. I want to see a break, pull back, and continue before trading it. I want a break of the bull flag before trading that. Now, having patience to stay in on a 4-hour chart is not easy. It depends on one's trading psychology, certainly. However, anyone who didn't think about trading it, you can see it has its advantages. You have profit, and you're just in that trade, and it's relaxing more. I mean, it's no trading is necessarily relaxing, but I mean it's like you have the time to make analysis, and you're not in any rush. Let me say it this way. For those with a bit less patience, then the 1-hour trading stop would have been better, right? And maybe you could have re-entered even upon the break of this one and rejoined the trade. Probably with a stop loss right there would have been sufficient. For AUD. Let's take a look. The bottom right here is at 86.56. Top here is at 90.77, which is 421 pips. And if we add 421 pips to this bottom, we get about 93.10, I think. Yes, 93.10 is where the red line is. And if we put a fib, we can see we bounce off the 38.2 fib. Let me get rid of this one. Or let me make it a different color for a second. Like that. And we can see the 93.10 is, well, doesn't really match. I mean, it matches, roughly speaking, this minus 618. It's pretty close to this minus 618 and this 61.8, right? 93.40, 93.10, pretty close. So in that regard, the 50 fib and the minus 272 targets that we have here at 92 is probably just the first target. And I wouldn't be surprised, indeed, to see an upside, to see a bull flag, and then another break up to the minus 618s. Yeah, there's a head and shoulders, and the way he's talking about a head and shoulders, I think he means this one. Something like that, maybe? Oh, you mean this head and shoulders? Ah, yes. Ah, gotcha. Yeah, that's true. Wait, I see your point. Sorry, I was thinking the other way around. Yeah, what Wei is talking about is that we had a head and shoulders here. Thank you, Anne, by the way. Thank you for joining, and I see you tomorrow, hopefully. Have a great day, too. And basically, the neckline is here. And what Wei is saying is that that could be a confluence because it's first of all a broken support, which can become resistance in the future. It's a neckline of this head and shoulders pattern. Would be equilibrium point, basically. And a rejection from there would make a lot of sense. So yeah, that seems good. There are a couple of trade potentials left. If you didn't take any buy here upon the daily pin bar, upon the bottom of the daily pin bar, upon the break of consolidation here, those were good trades. Not right now. The trades that are remaining are a break, pullback, and go up to the target. That's one of them. Then wait for the bear bull flag and take the next break up to the 61.8, and then wait for a sell there. So upon the break pullback at the top here, upon the break of the minus 272 and 50 fib after a bear flag though, a bull flag, excuse me, and then looking for the rejection off of the 61.8 fib. Great job. Thanks, Wei, for that confluence there. The very max the price should go is probably 96.30, 95.30, because then it's really running into a major resistance on the weekly chart. And we know that that particular top would not break soon. Alrighty. New Zealand dollar. New Zealand dollar is trending nicely. And I took this trade yesterday. I took trade actually here and here upon the break. Closed them out at 86 and 86.30, which is here at the top and here, just below the stopping spot. So that was good. But to be honest, we could see continuation again after this smaller bull flag. However, I'm probably going to wait for a bit bigger correction than this. We do have divergence here between these tops, and that would be a bit of a warning signal for me that I want to be careful with this particular break. I didn't see that with the previous one. This was a very strong momentum. Therefore, a break, that's why I like this particular hook back and break more than this one. First of all, we had a bigger chart pattern here than this. Second of all, we didn't have divergence. So I don't like this trade either. I mean, it could grow, it could break a bit. I'm not saying. It's just that I'd rather skip this one. And the reason is that when this made a strong fall, it looks like an impulse, right, of a first correction, and it is. The only thing is we don't know how far the correction can go. It could be like this, or it could do like this. Which one of these two it's going to be is difficult. Some Elliott waivers, when they see an impulse like this, must think that it must go down to this because it must get, it must be a zigzag, but it doesn't have to be. And of course, if it does, this would be great longing areas. Oh, it would be terrific because you're getting a very tight stop loss with a lot of potential to the upside. I had a pending order there. But price didn't get that low. And what can you do? Then you have to adjust your plan accordingly, right? The good thing about it is that if you're looking for confirmation at support, because this was making kind of a bull flag but still was moving down, then we did have a price action signal right here, or the break, which is one of my preferred things, is just to look for the break here. In that regard, this was actually an A, this was a B, and this was a C. And we continued. Now we have divergence though between the tops. We have a higher high, but we have a higher low in the oscillator. Your dollar is getting some downside here. Let's see how this hourly ends. We are at a resistance spot, as I said. So it looks like we're getting a continuation of this triangle, right? And a continuation of this triangle would mean a fall down to this spot. As I said, there's no guarantee in life, but this seems to be a decent bouncing spot, but one is never 100% sure. Dollar Swiss is doing the same. It seems to be extending the upside momentum at the moment. A break of this orange line to the downside would be a nice potential. Dollar CAD is moving up as well. It was in a long drawn out wedge. It didn't reach the bottom though, and that's sometimes a pity, and it can happen, right? Especially, as I said, if it's part of the E triangle. The problem with the E triangle is that it doesn't have to go to the bottom of the triangle. It could stop earlier than that. Not sure if I mentioned it yesterday, but I did mention it in general in other webinars, is that if you have a triangle like this, an A, B, C, D, those all go, mostly, of course, reach the top and bottom. The E can turn at an earlier spot, though. It can turn anywhere at this fib effect. And fortunately, for those who targeted the 78.6, it bounced up to 61.8, and that would have been a break-even trade if you were trading the downside D. But I did tell you that trading the E is the most profitable because we could get a break of the triangle to the upside. So those who maybe took a long at the 61.8 and put their stops here, those are doing very nicely now. And that's, these are classical support bounces. So now we need to wait for the breakout. In fact, we need a breakout, pull back, and go for this dollar CAD. At the moment, there's no trade because it's right at resistance. I don't want to trade it right at resistance. Even if it will break, or it might break, I'm not interested in that. Okay. Now, I'm not saying that. What I mean is that there's nothing wrong with a breakout trade, by the way, just to avoid confusion. It's just that personally, I'd rather wait to see how it breaks and then wait for a small pullback before taking it. Then I'm trading it more at support. That's what I mean. And sometimes I do trade the break itself, and I'm sure you're happy as Stellantis says, and I trade the immediate break right here, right high. But I only do so on lower time frames, like the hourly. And to me, this is a 4-hour pattern. This is a 4-hour chart pattern, and it's breaking a 4-hour chart pattern. And that's the main reason I'm not trading the breakout immediately. And that's why I'm waiting for a hook back, because it's a different time frame than I really want to trade the trendline break. I want to trade the trendline break, then I want to do it on an hourly or 15-minute chart. Personally. However, I mean, there's not necessarily anything wrong with the idea. It's just that I'd rather wait. But in theory, though, one could put a entry here and a stop loss here, and it should be fine because this is now should be the bottom of the triangle, the wave E. So that could be possible. Entry here, stop loss here. Alrighty. Let's see. What we have left is, for instance, is dollar yen to look at. What happened here? Well, we got a good break of this trend line. Yeah, sure. Well, because this is probably the turn of the E, the stop loss would be safe below that. Should be safe below that because we have an extremely strong power bar here. Plus, this is probably the E, so the stop loss could be below that, or should be below that, I should say. So that should be, that's technically a safe level at around 110.20, 110.17, let's say, to be safe. And if one trades the break, you could go to 110.60 maybe, just a bit above this this top, and this top would be about 53 pips. And let's see what the target could be. The target, the main target is 113.90. So that's about, if one goes, that would be good to go a bit below that. So 113.70, which is about 200, 113.70, just about 210 pips reward. That would be that's what I would think I would use for a TP, and the stop loss would be 53 pips, which is roughly about a 4-to-1 trade. Now, 4-to-1 is good, so even if that were to happen, even if this is a 50-50 setup, if it happens only 50% of the time, obviously it's a profitable proposition. Actually, even if this works only 1/3 of the time, it's a profitable proposition. Well, to be very precise, mathematically, it's already a winning proposition from 26, but obviously, then the margin is very small, so scratch that, 33%. I think it has a 33% chance of getting there. If you look at it from this perspective, an uptrend, A, B, C, D, E triangle, looks like an upside breakout potential, and then the -272 target after the 50-pip bounce here seems very decently and modest to me. So yes, I think it certainly has a 33% chance. I think it could even have a 50% chance. I mean, if I look at this, it looks like a 100% chance to me, or 99, but that's impossible, of course. It's never true. But what I mean is that the analysis looks so good that I wouldn't see why it wouldn't happen, but I guess there are tons of reasons why it couldn't happen. That's why we have to be modest and stick to 50 or 33. But anyhow, you get my point. So with that said, personally, I would chill stop it, though, because there's no guarantee we'll go to 113.90 or 113.70. And anytime we get a new 4-hour fractal, I would go about 15, 20 pips below that to lock in, to reduce the risk and lock in profit. Maybe I'll take that trade myself. Convince myself now at the moment. I wanted to actually let it break and hook back, but I could take some risk here and always add on when I see the things that I originally wanted to see, the break and pull back. Let me do that. Let's see. Yep, those look good to me. This has to be a bit higher maybe. Like that. Alrighty. Oh wait, let me do it differently here at the moment. With 116, 1 second, 111.60. Once again, 111.60. Buy stop 110.17. 113.70. Let me double check. Yeah, good. So that's all good to go. Let's move on. Dollar yen did make the break but didn't go anywhere. So it looks like, yeah, it looks like either it's an extension of the wave 4 and we'll get one more downside, or it's still moving down. The problem is that I'm not too interested in this dollar yen. It's just because we're right close to a support level. And as I said, the bounce trade is a bit risky because of this big momentum. If we do break above maybe this top, things are looking a bit different and we can expect maybe to move up, but for the moment I'm not too interested in it. Let's move on. Unless we really clearly break this support, hook back to it and fall to 100 or something like that, or if we break above here, hook back to it and move up to the Magenta. But these are big ifs because it's not trending and therefore not too interested in it. Pound yen, that's really the same thing. I mean, I could give you an analysis of what I see and think, but long story short, it's just not too interesting to trade at the moment. Although a break of this trend line could be interesting, though. So that could signal a bigger potential for downside. Let's see if the pound yen has the same. Well, we still need to break this trend line. It's a bit lower. Let's see, anything else? Let me see if there's anything interesting that I do like besides the dollar CAD. We got a break of this pound odd, right? Anyone who watched one of the webinars earlier said, knows that this is potential 61.8, knows that this is a potential zigzag, and therefore if we do have a zigzag, that these are the targets, and that is certainly looking so. Once we broke the support line, we know that the triangle correction is probably not going to happen like we saw with other currencies today, and probably we are going to get a zigzag. That's the difference, and that's always the tricky part about trading retracements. When do we get a triangle? When do we get a zigzag? If you start selling it in here and you get a triangle, then you sold it at the bottom. But in this case, we did get the break of this support line, and we can see that that's doing a pretty good job of indicating when we're getting this zigzag correction to the downside. Zigzag is just a bigger correction retracement, and these would be the targets. We just took out the 61.8 target after the 50 bounce. So if we put a new fib on, I would think any of these fibs could be the turning spot for more downside. Obviously, the higher we get, the less likely. The 886 doesn't seem too likely. The 786 is possible. It would be kind of like a hook back to the broken trend line. But I think the 61.8 is the most likely, or the 50, and maybe even the 38.2. That's what I would expect at the moment. And the safe stop loss would be all the way here, above the original swing high, swing low. Or I mean, the technically correct stop loss. No stop loss is ever safe. I don't want to mislead you here. I mean, it's a technical correct stop loss. Let's see. Let me go through all of these currencies here. The CAD Swissy looks like a good short as well when we get to the 50 or 61.8 fib, by the way. But let's see, it's a bit choppy, so I wouldn't maybe, forget that idea. This is quite choppy, but this was a very good impulse, so it seemed like one more downside seems logical, but that's the same CAD Swissy, sorry. Your CAD, getting a good bounce. Trying to see if there's anything that strikes me other than that. Maybe the EuroCAD indeed, because the dollar CAD is making a lot of upside. Let's see, put a fib on this one. Sorry folks, I'm just trying to see where the fib targets could be. Can be a lengthy process though, because basically you need to check all the way from the beginning where the targets are and then move the targets accordingly. However, if we just maybe use a bit of a discretion and not that whole lengthy process, but just look at the most recent fibs, which don't have to be the best, most accurate at the moment, but still, then we can see that we had the most recent one, we had an upside here. %50 bounce could mean the -272 target in vision. The only thing is though is that really, to be honest, the better trade was from the break here or from a bounce here. Now it's a bit more difficult to trade because we already have traveled a lot. Not easy. I mean, if it does make a hook back once again to 50 or 61.8, I think that does make sense. Trading it here is not easy. It could continue up. It could make a bigger retrace. Putting a stop loss here is dangerous because if it does make a bigger retrace, one gets taken out and then sees it go our way. Really, the only stop loss that still makes sense is here, and that's a big risk compared to the reward. So that's a bit of an issue. Unless you really use an ultra tight stop loss, then still the trade was from earlier, actually. If we zoom in, we can see that if one would have taken a break here and put a stop loss maybe here, that would have been, it's possible. It's a highly risky trade though. The entry would have been at the current price, in fact, 3 bars ago. Stop loss here, it's about a 22 pip stop loss. And you have to trail stop every 15-minute fractal because it's a high-risk trade. But if it does break, it's the only way of trying to catch this trade is using a tight stop loss, because a very tight stop loss, because if it doesn't go, you want to get out. You don't want to put a stop loss here or here because that's in the middle of the playing field. You either use an extremely tight one, which is risky, but if it works, you can get a good R2R, or an extremely loose one. Will this trade work? I don't know. I don't think the chances are too high. Statistically, a break of this works about maybe 40%. Maybe you have about, I don't know, I forgot exactly, but maybe 25 of those kind of around break even and 35 a bit bigger loss. roughly speaking. But the edge doesn't seem too appealing, but the edge is that those 40% that do work get a great R2R. Because of their tight stop loss, you get multiple Rs sometimes. Especially when you use a trail stop loss of 5-6 pips below the 50-minute fractal. 6 pips. So there is a decent chance, 60% chance this is not going to turn into a win, but if it does, it will, in the long run, it's going to be giving equity curve. Whether if it will do this time, of course, it's no way to tell, to be honest. I think that this break of this top is likely, but the question is, will it happen now, or will it retrace to the 38.2 or the 50 or 61.8 and then bounce? And then break this top. However, putting a stop loss all the way here is a pretty significant risk. So personally, I'd rather wait for the hook back, or let us just skip the trade and let it break, maybe make another bull flag and then take that break or something like that. I don't know. Maybe there's still some way higher to catch it. If not, then no problem. Bull flag, for instance, could make sense, just like we had a flag here, in fact. So let's take a look at XAUSD. In the meantime, if you have any questions, let me know. Looks like we got a bigger move down here. It did hit our trend line and bounce off of the trend line. Now, if you use this fractal to protect your trade, that would have made sense to reduce the risk. Although it's an early fractal, and I can imagine that some traders didn't do that because they're waiting for a bigger bounce and didn't want to move their trade to break even that fast, which I understand. Although moving it to break even fast, when you have a fractal in general isn't too bad of a proposition in most cases. But unfortunately, we did get a bounce, but the bounce didn't go far, and we still got a downside correction. At the moment, we're looking for a break of this black line really to know that this is over, this downside. We were talking about two potential bouncing spots, this minus 272 target and this minus 618 target. So let's see if that does happen. Still could happen. The safer stop loss, as I said yesterday, though, is, or not the safer, the technically correct one would have to be below here, or at least below the 16 target, but preferably below here, because this is in a big momentum down. So we could stop at this target or this target. Those would I expect to be bouncing spots. If it don't bounce there at all, it would be a bit surprising. We should see at least some bounce, enough to get traders to break-even status, is what I expect. Well, traders, I guess that's it from my point of view today. Any questions? I don't see any questions, so probably not. We'll be back later today. The Eurodollar is getting some downside, is getting indeed the rejection off of that triangle. Resistance looking like a triangle now. What did I want to say? Yeah, tonight Tarantula is talking, in fact, with, or has a webinar, I should say. Forgot the topic. Oh yeah, that's at 6 p.m. Central European Time, later today. And tomorrow we'll be back with our live trading lab, same time, 7:45 GMT AM. And here you can see, by the way, a premium webinar for those live accounts only. It'll be March 30th, by the way. Tonight, Tanenet is talking about psychology, spiral of doom versus way to success. That's tonight. Tomorrow we have Fibonacci and wave trading and the best candlesticks patterns. We have a Pro Learning Lab webinar at 5 p.m. GMT or 6 p.m. Central European Time. So this week, 3 more webinars, 2 at 6 p.m. and 1 at 8:45 a.m. tomorrow. Thanks all for joining again, and wish you a great day and great trading. Cheers.